listen-only mode.
Hello, good afternoon, Trade Pros. This is George Papazov, owner, founder, head trader at TRADEPRO Academy, and welcome to today's midday market update for August 17th of 2016. We're finally getting a shakeout and some two-sided markets taking place here, and that's exciting for us, right? Anyone that isn't feeling excited, then you're probably using the wrong trading strategy. But I'd like to welcome you to this update. We're going to talk about a lot of stuff here, including the Federal Reserve announcement coming out in about 1 second. In about an hour and a half or so, actually 2.5 hours. And we also have an FOMC member speaking, which is going to shake things up as well. So there's a lot of volatility coming up in the afternoon session. There's going to be trading opportunities. Keep the powder dry throughout lunch. Have some lunch, come back, and you're going to see a lot of money-making opportunities. All right, I want to remind you this information is for educational purposes. It's not to be used as a financial recommendation or solicitation to trade securities or anything else. You do everything at your own risk at the end of the day. All right, I want to start off by showing you, first of all, how the U.S. futures open. So this is 9:30 that we're looking at right here, 9:30 in the morning. Let's just replay what's happened so far. So looking at ordinary charts, like most of us do in trading futures, leads to subpar results. So you got to have market delta if you're trading futures. You could see some selling is taking place. You're seeing lower lows, lower highs, and everyone looks for some kind of secret sauce. And I just trade the trend, and I saw this was a bearish opportunity. All right, there's no secret about it. You zoom in and look at order flow, and you look at the second we start to get to about this 2177, which is the previous close. We were below the previous close, and the open was 2157.75 on the future. Started to get some selling coming in here, and I took a shot short. I told myself, I'm going to go short. So here we go. We got a little bit of a profit. We hit the Globex or overnight low with a massive amount of selling taking place. And a lot of people here would buy it. They would say, hey, you know what? It's been an up market, another sell rally to buy into. But you got to know there's a lot of selling. There's a 200 lot seller at 2175. So just hang tight until you get to that. Don't get too greedy. And then what happened? Some of them bought, whack. They took another hit. All right, whack. They just kept getting pounded until you start to see what happens, selling dry up. You see that? It bottoms out a little bit. We start to see some price structure and consolidation or market rotations. We got a guy here, 669. I don't know if you can see it. You probably can't. But that's a 669 contracts long. That's a ton of volume. And I said, all right, this guy bought it at 71.50, but price is just barely hanging at that level. It's still below. It's still consolidating below. So got to be cautious here. That guy might get a stops run. So went up. I took another short right there. What happened? Well, whack. That guy got peed off. Okay, so look at that. The institutional traders get hammered as much as any other one else, even as much as the retailer here. So took a shot short here on the fact that this guy 670 times bought it. Can't get the thing going up more than 2171. Two low auctions here at the top. All right, we're still futures. Don't worry, we're going to get into the rest of it. I told you I got a lot of info for you today. 1, 2, 3, fourth rotation down. How long is this thing going to hold? It's not going to hold forever on the 70s. Boom. We got another sell-off taking place. All right. And consolidations right back up. It's about 10:30 in the morning. Right back up to the volume weight average price. If you don't have VWAPs on your chart, you're missing out. All right. Look at this consolidation. There was a big battle. Where does the price come back up to? Right to that consolidation. What do you do here? The trend is down. Take a shot. Go short. Don't be afraid. This thing's giving you the best indication you've got all day so far. So take a shot at 71. You're going to sit through a little bit of chop because that's just how the market goes. All right, you're going to get some buying here to push you up to the VWAP. Take another shot short if you want, if you've been stopped out, or if you're trailing your stop above the highs here on the VWAP, perfect. You had a chance to actually drop your stop a little bit lower. What happens? Whack, another wave of selling. All right, look at this. Now you start to see selling dry up again. Sellers aren't as interested. 200 lot short at 67. Can't get this thing to go down anymore. Now we're getting a bit of a higher low sequence in a consolidation. Say, you know what? This guy shorted at 67. I'm going to go and buy it if it pops above. All right, well, let's do that. Boom, whack. Now you got your long entry. Really, this was an opportunity for you to make at least $500 to $2,000+ even with a small account on futures trading. Now, I know a lot of you don't trade futures. That's fine. We'll talk about options soon as well. So here's where we're at now. What do you think we do now? Well, look, we drove it up. There's no big buyers or sellers at the moment. Therefore, hang tight because the bulls took the leash a little bit on this sell-off. But now they're at the point of control, which is the level at which most contracts are exchanged. back up to this volume weight average price. Most rookies are going to try to get long here, saying, holy crap, we're going to get a rally. Well, remember, whack. That's what happens when you're at the volume weight average price, because the volume weight average price is essentially the report card for institutional traders. Their job is to sell above or at the VWAP and buy below or close to it if it's an up day. All right, if you're an institutional trader and you're buying above the volume weight average price, that means the average trading price for the entire session, you're buying above it. Let's say, guess what, buddy? We can find somebody else to buy above average. We need you to be buying below average. It's the only job in the world where you're expected to do below average pricing. Imagine that. Imagine being told in your job, you got to be below average. Ain't going to happen. Let's look at a little bit more of a traditional chart. I just want to get you excited there a little bit, and then talk about what some of the releases have been so far today, what's coming up, and how you should trade the Fed. Those of you that haven't traded the Fed, do it in your demo accounts. Those of you that have traded it, these are some of the most profitable days. And this Fed trade comes in 3 extensions. I've talked about them before. I give away this trade for free. I don't really care. If you guys make money, I'm even happier. Who cares? So I want to show you how to trade the Fed. Just give me a second, though. Let's go to S&P 500. Let's have a look at what's happened. We're starting to see some bears coming in. How long was this rally going to go on for? Well, we talked about a rising wedge here. Today, that rising wedge broke. In yesterday's update video, I told you there's a rising wedge. You could see 2,200, but my hunch was that we're going to go down just based on the fact the momentum's diverging for a long time, rising wedge, volume stinks. Our next target's about 2,120. All right, that's where we're probably going to get to. Now, on the way down, are we going to stop at where we're at right now, 2,167? Absolutely. In fact, we could even pin back and hit 2,200 before the great drop. That's coming. It's surely coming. I'm telling you, the market's going to drop. It's a matter of when. Don't get all crazy out there like everyone else, shorting here, then here. They can't go any higher, and here and here. And then once all your stops are run to the top, and you're like, screw this thing, I'm going to buy because tried shorting it, didn't work, got stopped out every time. I'm going to buy and make money with everyone else. That's when it gets dumped. That's what happens. So the market moves. The market takes the path that causes the most amount of financial stress, pressure, and losses to trading accounts. Get that through your head. That's very important to realize. All right, so watch this 70 very closely for support. If you haven't shorted it yet, don't bother. I think it's done. I think you're gonna get some chop here, some sideways price action. It's option expiry week, so this Friday a lot of options expire, the monthlies, and usually option expiry weeks tend to have positive skew. So we could get up here. Saw a lot of call volume around 2,200. So you bet your butt if it gets above 2,200, which is a large rally from here, I acknowledge that. But if he gets above 2,200, everyone that shorted calls has to buy into the underlying. This is going to rally up to 2,250. Will that happen before Friday? Probably not. All right, but just be cautioned that 2,200 is a massive magnet, but also a resistance. In terms of everything else, yeah, momentum's bearish here on S&P 500. We've caught with the 10-day moving average. Now we're looking at 20. Sorry, that's the 20-day moving average. Now we're looking at the 50. 100 and 200. Even if it gets down to the 50 and bounces, we're still bullish. Don't get all crazy and bearish here. Just understand the trend that's intact is a rally. And I warned a lot of people here on this freaking day, August 2nd. I can remember it. I remember it clearly. People saying, I'm going to short here. Here we go. It's coming down to 2120. I'm like, yeah, you short. But I'll tell you what, don't do it on your account. Just do a bet with me because I'm about to buy it. And bam, the thing popped. We could be in this exact same boat here. Be careful. Super, super cautious shorting. But real selling damage has been done. That's real selling pressure. The only thing I'm worried about, volume kind of stinks. So let's see how the day ends. If volume gets above average on the selling, then you know here comes a wave down. Right now, yeah, the bulls are a little concerned, but they're holding this fight. All right, all they've given up is what? About 4 weeks worth of rally, considering that we're up 10% or 200 points off the Brexit low. You know what? Not a big deal. Bulls could still have the leash here. So just be careful. That's all I'm trying to tell you here. Now, in terms of how to trade this Federal Reserve announcement, we have 2 things coming up. First of all, FOMC member Bullard speaks. If you don't know who he is, well, here, I'll do your homework for you. You should know this. All right. He's going to speak about the U.S. economy and monetary policy. He is the Speaker, Federal Bank of St. Louis. That's in the full name is James Bullard. He's more hawkish than good, which is good for the currency. He's a voting member in 2010, 2013, and 2016. The thing you got to know about Federal Reserve presidents, are they current voting members? If they're current voting members, the market's going to be paying attention to these guys because they have input on interest rates. If they're a non-voting member, like Williams yesterday and a few of the other Federal Reserve presidents speaking yesterday, you know what? Who cares? Screw those guys. They're not voting. They have no opinion, no weight. One guy was saying yesterday, oh, inflation has to be higher. We got to change our monetary policy. We got to do all this stuff. It's not working. We got to tie it to some economic growth outputs and then change everything we're doing kind of thing and just rile up the market a little bit. Are you a voting member, buddy? No, you're not. All right, pipe it down, speak at your conference. But markets don't think that way, all right? They get caught up in the hype. Markets trade on emotion. And he's going to talk at 1 p.m. today, so he's slated to come up in about, what, 20 minutes or so. A little bit longer, I think. I don't know how long I've been doing this broadcast for. Okay, what he says could potentially move the market. It could have some impact. Be very cognizant of that and be aware. Listen to it. Bloomberg will probably livecast it for free. All right, and then at 2 p.m. comes the all-important announcement, the Federal Open Market Committee meeting minutes. Okay, look at this. If you click on the detail, this website's great, forexfactory.com. For those of you that don't know what these are, you need to read these. Every day you have to read what they are and know what they mean and how will the market interpret them. All right, look, scheduled 8 times per year, 3 weeks after the federal funds rate is announced. So the announcement already happened. These meeting minutes are not going to change whether or not there's an interest rate hike. There's no possible way there's going to be an interest rate hike today. I've been reading articles, people saying, will they hike today? What the heck are you talking about? There isn't even a vote. So if you ever see an article that says that, never read that website again. Close it and delete all the cookies from your browser history, burn your computer and throw it out the window. Actually, don't do that because you need a computer. But 2 p.m. FOMC meeting minutes. Here's some of the related stories. Will investors get Fed clarity today? Well, here's the thing. They voted to not raise rates, all right? The next meeting is in September, okay? And the one after that's December. And the question is, they had these in their meeting minutes. They said that the medium or short-term economic outlook isn't that doom and gloomy. It's actually kind of positive and increasing due to labor market increases, a lot of jobs added through non-farm payrolls. So now the question is, all right, if you guys are so rosy on the economic outlook, why don't you hike the rate? So in these meeting minutes, if there's any indication towards them saying, you know what, the market outlook is better, it's rosier, the economy is doing better. If anything's better, good for the economy, that's bad for the market. All right, that's more than likely going to get driven down by algos because they're going to say, all right, it's good for the market, means rates are increasing along with the percentages of a hike are going to increase. Therefore, that's going to put downside pressure on equity markets. So good is bad. Good news is bad news. Bad news here is good news. But here's a situation coming up. You got an election in November. Are you going to hike it in September? Heck no. I can almost guarantee you Janet will not do it in September. You could actually, if you want to bet against me, you could do it. You could trade the futures. All right, there's Fed Watch futures that you can do it. I participate in that market occasionally. Okay, so September, they're not going to do it. Are they going to do it December after the election? Who knows? All right, December is the more likely of the two meetings to see a 25 basis to 50 basis point hike. But they have committed to 2016. The Federal Reserve said in 2016, we're going to raise rates. They've been preaching that since 2015 and since the last hike in December of 2015. Okay, they hiked it. What happened? The market absolutely dropped like a stone. Are we going to repeat that? Look at this. Go back to January of this year. All right, let's go back. Travel back in time. January. What do you think happened up here? Hike, whack, market went down. Now, is that not looking similar to you? If this is not looking similar to you, then well, you need to get your prescription checked. No offense, just kidding. But look, this thing's going to start coming down, and if they hike rates, there could be a seismic shock to the economy as a whole. The market can come down. So that's kind of what Janet's worried about. Let's see what the meeting minutes show and how she's going to dance her way around not hiking, because I don't think she's going to hike in 2016. I personally don't. Now, here's how you trade this thing. Okay, I don't care what she says. Nobody knows. Those of you that are out there saying, I think she's going to, the notes are going to suggest a stronger economy, therefore there's going to be a hike, so I'm going to short this thing. If you're shorting before 2 p.m., I want you to end this broadcast and get out of the room and never come back, because I'm sorry, I'm a little saucy today. Just high energy. The market's absolutely rallying. Thank goodness I'm long. But if you're doing anything before 2 p.m., then you're gambling. That's what you're doing, is because algos are going to drive this thing. You don't know where it's going to go. Here's the trade that does make sense for 90% of people. Okay, so it's going to come up. There's going to be a news release. It'll probably pop or drop. There's going to be an initial reaction. Let's call that IR, initial reaction. Okay, get out of the way of that. You can't do anything with that initial reaction. Okay, the algos are going to take this thing and spin it through the roof or drop it. And then what's going to happen is the algos are going to say, all right, we've had enough. I think we made our money. Let's sell it off. Let's get out and let's sell our position. So there's going to be the stops coming. then it's going to start to stabilize, and then that's where you go long. Okay, somewhere between 215, 212, let's call it, to 245, you're going to see that happen. It's going to bottom out. It's going to pop, drop, stabilize, find some support, grab this thing long, target the top. You're going to get it. That's a really high probability trade on the Fed announcement. On the downside, if it's bad for the economy or bad for the market, I should say, this thing drops, rallies a little bit, starts to taper off. You see order flow start to die out, and the stops have been eaten out. On the short side, guess what? Bam, it's going to come down. This is where you get in. So what I'm saying is, if it's 1:59 p.m. right now, don't do this. Heck no, don't do this. But sure as heck, do the dash line. That's you. That's profit potential right there at its finest. I'm going to be getting in at these 2 points. One of these 2 points with futures. I'm going to load up, and I'm going to make some money. All right. That being said, look at these futures. Anyone think of a stop run here when they see this? I was just talking about this, guys. This is crazy. I was just telling you, oh, everyone's short, everyone's short, everyone's short. Well, look, I also said to take a shot off this VWAP. What would you have risked right here? Okay, so that short wouldn't have worked out, but you had 2 shorts that worked today and one massive rally that you could have caught by going against the grain. Now all these stop losses, guess what? There's going to be some suckers in here that start buying this at 73. Say, oh, we're going to miss this rally. Mark my words, 73 will probably cause a bit of a sideways winder. It's roped in enough longs now. Dropped it down to about negative delta, about 4,000. It's roped in some longs. Now you got some sell stops built up. So how convenient would it be to whack this thing right back down? So just careful out there. I told you to be careful if you're short, because these things have an impact. All right, that's the market update. That's how you're going to trade the Fed Reserve announcement coming up. Don't gamble. Take the low risk, high probability trade. That's how you're going to stay in the business for the longest amount of time. All right, for the subscribers here, for the Earn Package subscribers under Trade Pro, hang tight. We're going to do a little bit more information on how we're going to trade the day. I'm going to show you the actual triggers and have a look at our portfolio and what trades we've done and are going to do this afternoon. For those of you on YouTube live stream, thanks for watching and thanks for tuning in. Good luck out there. Don't get slaughtered. It's going to be a volatile session. Don't chase it. Let the market come to you. Okay, guys, be super careful. Remember, we have FOMC members speaking at 1 p.m. That's a voter. And then we have the actual minutes being released at 2 p.m. No press conference afterwards. All right. Keep them tight. Keep that stop loss tight, and don't risk much more than you normally would. It's just a regular day. Don't get caught up in the hype. Traders that are caught up in the hype die quick in this business. Take care. Have a great day. Hope you enjoyed this update. Share with your friends. Subscribe now and join us as part of our subscribers to get some more insight on actual trades and trade setups and ideas. Take care. Have a great day. Guys, hang tight that are part of the Earn Package subscribers. 1 second.